Alrighty, good morning everybody. It is Thursday, June 15th, and what I'll do here, again, like I do every morning, is a quick review of yesterday. So remember, when we came into the market yesterday morning, we saw some pretty good clues from the 4-hour and the hourly for some type of pullback, right? So when we came into the open yesterday, the idea was, with the expectation for a pullback was in the charts, because when we came up to our 60-minute, this is what we saw. We were parrying right off of the major retracement level. There was a 60-minute bearish signal up there. When we come down to up to the 4-hour, when we were testing up, let's zoom in, testing up into, again, the major retracement level. We were pulling back from it as we were doing our pre-market, and there was also an argument for a potential bearish divergence. So everything made sense for the market to pull back. And what did they do? They popped it 20 points. And so let's zoom out a little bit so we can just see the bigger picture. Popped it 20 friggin' points, and then the market went ahead and sold off. So we, maybe faked some of us out if we were trying to be bears, but eventually it did happen, and we got this sell-off. So let's look at some of the notable things that happened here. Some really, really nice tradable opportunities coming all the way back. Let me refresh this. So here's the New York Open yesterday. And like I said, we expected the market to potentially pull back, this was really your best opportunity a couple minutes after the open to get short right off of the 200 moving average. Again, very limited risk there, and there was a decent pullback. Now, was this a beautiful 20-point trade or anything? No. But that would have been a great opportunity. And then a couple minutes after the open, the bulls jumped right in and started ripping it higher, holding the fast moving average the whole way up. And this right here was probably the best trade you could have taken all day. As we were getting a rejection from what we expected, right? We expected the market to potentially pull back, and it didn't, right? It came down and made a higher low a couple minutes after the open, and then we got through the VWAP. We got up through the Hopeful, got up through the high the day before, and then you can even see the cross, the 200 starting to cross back above VWAP there. So the pullback right to the holy orange power level and the 200 moving average was a perfect play to see if we could actually get this rotation back up. And again, very limited risk. There was zero risk on that one, and we got this. Like I said, it was a 20-point push, maybe not 20 points from here, but about 20 points from the low of the morning. So we went from about 44.15 all the way up to 44. Actually, maybe it was a 30-point push, but the whole way up, holding. This was less than 2 point of a break of the 200, less than 2 points of a break below the 200. So you could have bought the 200 the whole way up and gotten 10, 20, 30 points out of it. And then finally, let's resume it. Finally, it failed. So it came back. Great opportunity to buy the VWAP. Again, less than 2 points of risk. Bounces right back up, comes right back into the 200 here. And then this is when we finally got the pullback we were anticipating. So they faked everyone out with this pop, and then as soon as they popped above the major retracement level we were watching, next thing you know, they popped it right back down, and then that's when the pullback happened. So just want to show you here on the higher time frames, just from an educational perspective here, this is what we're looking at. We saw the bearish signal from the high of the overnight session right off of the major retracement level. Okay, what happened was they popped it out and came up, like we saw, above that major retracement level. And when that happened, if you were watching the higher time frames, you would have seen this major divergence from that high. So what happened was there was a 60-minute divergence from that high, and there was a 4-hour, if we go over to the 4-hour here, a 4-hour bearish divergence from that high. We pushed lower on RVI and even on the stochastics here, but we popped up to that higher high over there. So there was actually, we got the divergence before the market opened, and then this pop got that second divergence, and then that's when the whole market sold off here. All right, so we got a little bit faked out before the open, and then that was kind of the final, that was the penultimate bearish signal, and then finally got the bearish signal there. So that's what led this whole sell-off here. And when the market broke down below VWAP, we held it We were holding above the major retracement, and then this failure down below VWAP and getting bound through Hopeful and everything should have been a clue that, you know, maybe the pullback is finally occurring. We did hold the close of the day before beautifully for a pop, but it did fail right off the the high of the day before and essentially the 200 there. And then the whole market just started to sell off. Some great opportunity to buy 50% of the day before for any of you out there using the daily power levels. Decent trade right up into the FMA. And then as it continued to sell off, another opportunity to the tick off the 200 moving average. And then the end of the day, we got another rally on these shorter time frames. Again, pullbacks into the 200. Again, a couple ticks of risk here, and we pop right back to the major retracement that we were watching for the last week or two. So pretty cool stuff. And then we just kind of go sideways here at the end of the day. But notice, right to the Hopeful, pull back, right to the close of the day before, or the high of the day before, pull back, right to the close, pull back, all holding, again, to the tick or with maybe a one tick break. And then we even pulled back at the end of the day, held 50% of the previous day again with less than a 2-point break. Actually, I take that back. This was a 3-4 point break and then finally popped at the end. So there were plenty of low risk opportunities all morning despite the back and forth price action. And that's what brings us into this morning. So let's look at what's happening here. From a news perspective, like I said, all week we're going to have a lot of kind of major news events. The FOMC announcement was yesterday. And actually, now that I think about it, let's just see here. So FOMC is what led to, I guess, the afternoon rally. So if you go back and look here, so right around 11 a.m., which my time on the Pacific here, we were kind of pulling back, and then the news announcement was right around here, and then it turned around and rallied up. But there was really nothing significant yesterday in the market, right, from that news. So not as much of a market mover as I expected, given all the stuff that's been happening here. But this morning, after we had the pre-market stuff here that's already happened, we're going to have business inventories at 7 a.m. Pacific, 10 a.m. Eastern. That's kind of the last significant news event in the early morning that we'll be trading here. And then outside of that, we'll have consumer sentiment tomorrow. And remember, tomorrow is when all of the contracts expire, the futures contracts, the options contracts, etc. So that's that. And so just remember, at 7 a.m. this morning, I'm going to go ahead and mark it on here with a vertical line, 7. Make sure we got it, 7 a.m. And we'll lock it in place, okay? And then I will also copy it down to my 1-minute chart that I have on another screen, so that if I'm watching here right around 7 a.m. my time, I might want to be careful about putting that trade on because we could see a jump. So got that on there. And now let's look and see what the charts are saying here from the higher time frame perspective this morning. Unfortunately, it's a little bit of a mixed bag. From the daily perspective here, notice this huge rally, and we come right to the, again, that major retracement we've been watching. So look at what the candlestick from yesterday looks like. A lot of times that is a reversal candle, right? We see a lot of these type of candles at the tops or the bottoms of moves. But again, it's hard to interpret whether that is bullish or bearish. Definitely a lot more of a wick to the downside, indicating that there was a much bigger rally to the upside yesterday compared to the downside. But there's really nothing significant over there right now from the daily perspective to interpret. Everything just looks really strong, like we were saying yesterday. So that's that. So we don't have the main reason, and I've got to emphasize this, the main reason we're doing this every morning, or I'm doing this every morning, is to find times in the charts before the market opens when everything aligns up from a signal perspective. And so right now the daily is not giving us any type of bearish signal outside of the fact that the candlestick maybe is a little bit wonky there, but there's no bearish signal again from the daily perspective. We've been saying this all the way back at the beginning of last week when the market was chopping and chopping and chopping. We don't have any bearish signals right now from up here. All right. On the 4-hour and the hourly, both the hourly here and the 4-hour, we do get the bearish signals. And remember, that's what I just talked about. We got it before the market opened, and then they kind of faked everyone out and pushed it a little further. And then when they pushed it a little further, there's that bearish divergence. And then that's what led that whole pullback we saw yesterday. Unfortunately, we got a counter signal from the low on the 4-hour, and then I guess that's just before it led to another bounce out. And this is a lot of time in here. This is 4 hours of trading. So that must have been that pullback, and then we saw that rally, and then it went sideways at the end of the day. So we've got kind of conflicting stuff over in here once we get down to the 4-hour and down to the hourly here. So we've got kind of just some basic lines in the sand this morning. We're going to take it conditionally in terms of the levels themselves. So again, outside of the 4-hour and the hourly bearish signal from yesterday, we don't have that nice holy alignment with the daily, the 4-hour, and the hourly right now. So the fact that we got bearish signals from yesterday's high, and we got a, I don't know, whatever this is, 43.83, maybe a 50, 60 point pullback there. 50 or 60 point pullback is something you should expect from a 4-hour hourly signal. So when that hourly and that 4-hour are agreeing, a 30, 40, 50 point move from where that signal forms is what you would expect. Anything more than that, and now you're just asking for, icing on your cake. So I think we got the move we would expect from the high of yesterday, the signals from the high of yesterday. So what, unfortunately, we're stuck in here, like I said, we'll take it conditionally today based on where price can get compared to our levels now. So first things first, the high of yesterday has enough bearish signals up there, again, the hourly and the 4-hour signals, that's going to be a really significant level for the bulls to get through this morning. So if the bulls can get through the high of yesterday, then, and assuming again, once again, it's not a peak above and fail, which we've been seeing day in, day out in some cases. If it's not just going to be a slight peak through the high for them to fail back down, then we've got our areas of contention up above, right? So we've got the major scaffolding at 44.53 half. You should have that on there now. The major scaffolding at 44.79 quarter. And then it's all the way up to this huge gap up there, all the way up to 45.22. Any further than that, and this is another really, really big gap, all the way up to 45.85. So those levels you should already have on your chart. And remember, we're right at this major retracement area in the chart. So when you zoom out and you really look at it from bird's eye view, you can see that we're right at a critical area in the chart. And this is the major high back here. Now let me get the actual number, 44.56 half right there. This is a really critical little pocket in the chart right now. It's kind of like the moment of truth for the bulls. Because if the market can't get up through here, the 61.8 retrace and the major high we made back in, I guess, August of last year, then this is just going to be a big major double top type formation for this major rotation back down. So it's a really important part of the chart here for the bulls to go ahead and probe through and get through before we can really expect any type of deeper push or larger push back to high, the all-time highs. So just keep that in mind from this higher perspective. So the high of yesterday is going to be important here if they can get through it appreciably and not just be a peak above and fail. On the other side of things here, and it's a mixed bag inside of this previous daily range right here. We had that 4-hour bullish signal from the low, the 4-hour bearish signal from the highs, and we're trading and chopping inside of not only yesterday's range, but essentially the last 2 days of price action. So until we can get appreciably through some of these levels to the upside, or we can get down through the low of yesterday and basically the low of the day before. So the low of the last 2 days, it's going to be a choppy situation inside of here. Now, if the bears do jump in, and remember, we don't know exactly where it can be, but we do know some pretty precise areas in the chart that would make sense for where those rotations would occur. Kind of like what we saw off the major retracement, kind of like what we see off of our scaffolding levels, etc. So looking at what we're at right now, we've got and this is just coincidence sometimes, and some days it's day in, day out, but we've got the Hopeful and 50% of the day before essentially right at the same level. I think they're maybe a tick apart from each other. And that's the first level that we're coming up into this morning. And also notice that it's this nice little ledge from the overnight session where we got this bounce out, right? So the first area that we could expect some resistance this morning is going to be that little pocket right in there. Those swing lows there are 44.1175. So, and then it just so happens that Hopeful is 44.1175 there, and then the 50% is one tick below. So this morning, the first area we would expect to hold is going to be, and I'll go ahead and shade it right here, maybe a tick or two above that swing, maybe a tick below 11.5. So we've got 11.25. Why don't we call it 11.25 to 12.25 here? All right, and here's, for Neil and any others wondering, I'm double clicking template, and then I have that template saved for a gray box, right? And I'm throwing it up there. So that would be the first area that makes sense for the bears to hold. If they do pop through there, you can't ignore the scaffolding that we're currently trading around right now at 16.25. So make sure you have that on your chart, 44.16.25. Any further from there, and this is a common occurrence. Common occurrence for the market to trade up into the close of the day before and get some rejection off of it if we're in a pullback scenario here. So be aware that just a couple points up through this little pocket over here, we've got our 44.2475, and then we've essentially used the major retracement with the pullback in the overnight from yesterday, and then this pop through, and then at the end of the day yesterday, remember, we came right back to it and we pulled back now. So I don't know if this is necessarily the best tradable level, as far as holding to a tick or two and reversing, but it's kind of like a place marker there, right? So if the market does end up coming all the way back up to that major retracement area, if they can pop through and we're in a strong trend, it might be the kind of the beginning here of the next push up, right? So it's just kind of there as a placeholder at this point. It's much more relevant yesterday as a potential tradable level, but that is there. And then that high of the day before, which we said is going to be very important for the bulls to get through this morning. So those are kind of the smaller levels that we're dealing with over inside of the overnight range here. And then if the bears do end up holding from one of these areas and we start to get through the low of the day before, we've got basically the same levels down below. Remember yesterday I said we've got the leg up. Let's see if I can zoom out. This most recent leg up from the 06 half low all the way up. Remember yesterday it was up to this overnight high, and I told you that this fibs that we have on here, including the 61.8 down here, is probably going to shift if the market pushes to new highs. So it did push to new highs. You got to redraw that leg up, and that gives us the 61.8 at a new level this morning. So let's look at these levels down below. Down below the low of yesterday, we've got the major swing and this little pocket, basically 67 to 69. And that major swing high there happens to be 69.25. So if they get through the low of yesterday, don't be surprised if that is a beautiful little rotation area right there. A little bit further is the scaffolding level, so you guys understand how important those areas are. And there's that new 61.8 at 43.57.25. So you should have that 61.8 up there. This is where it was yesterday. and then they got the peak to the new high. So it got migrated up a little bit. And oh, I forgot to pull this guy over here. So we've got the next pocket. If they get through 61.8 of that leg we're looking at, then we've got this pocket here, and I'll bring it out to the 16th, I guess. And we've got the level here. So what are we looking at here? Again, 40, 43, 46, 46 quarter, up to just about 48 quarter, 48 half there. That is last week. Remember, we kept coming up right into that pocket and getting rejections all week until finally we broke out, pulled back. Notice where it pulled back and held here, and then popped out to the new range up here. So we've got that one down there. And then if the bears, remember, this is just kind of a placeholder as well, it's telling us that that's 50% of last week. So if the bears are strong enough here and they get all the way down and they get through that, then it's like opening the floodgates down to these deeper areas. So let me bring this out. These are all the same levels that we've been talking about below us. So once we get through that 50% of the week, we've got the scaffolding 43.32. We've got this beginning of another little price structure area here, and swing high at 43.22 half. Again, that should be on your chart. And then the scaffolding here at 43.08 quarter. And then finally, this is probably wrap it up, because I don't think we're going to have an extreme sell-off here, but I guess anything's possible in the market. And I want this to be 3 p.m. because I'm OCD about it. 3 p.m. Okay, and so that's that next major swing. And then I guess I'll just list the last three scaffolding levels here so you guys can get these on your chart. We've got 42.70, 75, 42.55, 75. So it's 5 point. That's a really close one. These are what I would consider maybe more minor scaffoldings, but 42.39 half. So a close little pocket here of scaffolding in this area, and then it's down to, I guess, levels that we don't need to worry about right now. That's going to be 200, 300, 400 points lower. That's not going to happen today, I don't think. Doesn't make sense, but so that's what we have below us right now. If the bears do rip lower, those can be very, very high probability areas for rotations. And then finally, what we want to look at here is we want to look at the shortest time frame and see where we are in terms of the VWAP and the 200 moving average. And as you can see right now, they're basically right around CMP, current market price. So not really something to talk about. Like I said the other morning, if the 200 was coming across up top here, maybe we would consider some resistance up around that area. But we're right up and close to it right now, basically kissing it. So kind of like this little right here, right? If we were down here, I would have told you that up in this area would make sense for resistance, because we have the 200, the VWAP, and the scaffolding all coming together right there. And sure enough, that was the rotation spot to continue pulling back here in the pre-market or in the overnight. But this morning we're right up next to all these, so we can't really say much. So that covers everything for this morning. Like I said, it's a pretty mixed bag, and the reason we do these pre-markets is for the really setting up for those mornings when everything lines up perfectly. And that's when you're going to have those days where things just push one way or the other. And unfortunately, we don't have that right now. And it's been kind of like that for a lot of days that we've been meeting. Very conflicting. And remember, our first week together, the market just chopped up and down in that range and couldn't break out through the highs. And we kept getting peak above and fail and peak below and bounce. And that's just the nature of the market right now. So we've got a couple minutes before things open here. Again, the 30-minute, I'm trying to zoom it out enough so that you guys can just get a bigger perspective while you're trading on shorter time frames, and just kind of see ahead of time what are we approaching, whether we're approaching from the top end or the bottom end, as the market is pushing one way or the other. So I'll leave this up kind of zoomed out so you can see all this. And I think that's all I have for you today. So just looking to see if there's anything else to mention here. I think we'll leave it at that. You know, looking up to our weekly, which is that next step up from the daily. It's also still looking really strong, but it is interesting to note that we are petering out right at the 61.8 right now. So everything looks strong, but we got those counter signals on the 4-hour and the hourly, and the question always becomes, how far of a pullback is it going to be? That could have been the pullback that we get from the bearish signals from yesterday, and now it's over. All right, so that's the big picture. Throw this back. And let me take a look at the chat, which I always forget to pull up. Is the 4-hour bullish signal because of the bullish candle? So check it out. Let's pull it up. So the signals I'm seeing here on the 4-hour chart, we saw it yesterday off of the overnight highs, right? We saw this. Let's see if we can zoom it in so you can see this a little clearer, because there's so many lines when you're on such a high time frame chart. They all look close together, but this is what we saw from the overnight high up here, and move that up, off of the retracement level. You saw this push up, and then on the indicator here you see this pushing down. So that's what we saw coming into the open. It looked like a decent bearish signal from a significant level, and then they popped it out, and then there was a second bearish signal from that high. So it pushed a little higher, and the RVI pushed a little lower. Right, so when we got another bearish signal up there, when they finally pulled back and came down to the low of the day, or very close to the low of the day there, we got a bullish signal, and that was from, let's zoom out here, and maybe, oh, so it was this right here. So the market pushed from the low of the day before, was a couple ticks below that. So from the day before's low, we've actually pushed and made a slightly higher low. Okay, but the RVI pushed all the way down here. So RVI here to a much lower low here, price here to a much higher low there. So that's what we saw here. Maybe the next candle after that formed, you saw that right there. And again, there was that push at the end of the day. That might have been what it's hinting at. And like I said, we're stuck in between both of those signals right now. The 4-hour's been giving us a lot of counter signals. You know, it gets a bullish, then it gets bearish, bullish, bearish. Makes things a little bit tougher there. Like I said, some mornings will come in, they'll just be a nice big bearish signal and nothing else. But not this morning. More often than not, we're going to have kind of more questionable mornings, and then every once in a while we'll have times when the stars align. So here we are testing our first expected resistance zone, guys. The pullback, remember, if they hold VWAP in the FMA, or they pull back into the 200 and it bounces back out, more often than not they're going to come and retest this high. The question is, are they just going to retest and fail? Or are they actually going to rip right through it, right? You never know. But there's that first pocket that we expect to be potential resistance this morning. All right, so I will see y'all in the morning on Friday. See if we can finish the week out nice and green here. So have a great one. Let's talk soon.